Well, the big question now is, will the European Union get a deal like Japan got, the 15% reciprocal tariff rate and a 15% rate on auto exports? Those mean a lot to the European Union as they do Japan. Of course, German automakers, want to keep access to the American car market. So the tariff that they're staring at right now is threatened at 25%. So 15 is looking a lot more likely if Trump can agree to what the Europeans would want out of those negotiations. Now they're complicated. There are other industries, steel and aluminum, that are facing 50% tariffs, and semiconductors and pharmaceuticals that matter to the Europeans. So there's a lot of fine print to go through to pull one of these deals off. And of course, there are 27 nations in the European Union, whereas you just have to deal with one Japanese government to get something over the finish line. So it looks like they're making progress. The European Union collectively is the biggest trading partner with the U.S. So this is a consequential decision for both sides. The deals that we've seen so far, the 5 or 6 of them, they have been generally smaller economies, with the exception of Japan. So the big deals are starting to come closer to the finish line here as we get near the August 1st deadline.
Now, Brendan, you mentioned Japan, so let's go there. I mean, there's some concern that the president may have given away too much. I mean, we're still working through that trade deal, correct?
Yeah, there's some details. They announced kind of the broad outline of it, but there's still some things that they need to work out. The 15% tariff for Japanese automakers makes things difficult for American automakers who have to contend with a higher tariff for their supply lines between Mexico and Canada. So there's some sense that this could even disadvantage American automakers. So the goal for the Trump administration is for all of these companies to move their production to the U.S. and avoid tariffs altogether. But there's some when you try to negotiate individual trade agreements across dozens and dozens of countries, you're going to create these sort of arbitrage opportunities when the tariffs are different. We've lived in an era for the past several decades where tariffs are pretty consistently low across the board, and when you start bringing these higher tariffs in at different levels, then it really it really makes things complicated for the production lines that extend across the world.
So is part of potentially, like the Japan deal, there's many parts of the Japan deal were very interesting, one of which was setting up this fund in the U.S. It seems like, how much is it going to cost this U.S. government to kind of get this 15% rate? How many billions of dollars do we have to kind of invest in your country? Is that something that is now, I guess, table stakes for these big trading partners if they want to get a deal with the U.S.?
Yeah, I mean, the Americans came away from the Japan talks saying, look, Japan brought this really innovative new approach, this mechanism, this fund that the Japanese government would sort of provide credits and funding for investments in the U.S. And Japan's already a big investor in the U.S., so there's some questions about whether they're just repackaging stuff that's already been in train, but that seems to be the model that the White House likes, is bring us something, a big headline number, a big amount of purchases of American goods, LNG, whatever your country needs. Put it on paper so we can announce it, and you'll get a break on that tariff, which the floor last week was 10%. Now it looks like it's 15%. So everybody's getting 15% or higher from here forward, it looks like.